Well, if you are like me, you are not enjoying at all what is going on at the markets right now. This is something that is new for a lot of people since there were a lot of new retail investors coming onto the scene in 2020 and 2021 when things were just growing massively after the beginning of the 2020 pandemic, COVID-19. You remember that thing? And so, yeah, things have pretty much kind of did a bit of correction. Like, the S&P 1 year later is lower than it was a year ago. So things are not looking good. The Toronto Stock Exchange, that is a slightly different picture. It is up 3%. But again, in the last year to date, we're down 5%. So I imagine this is very unsettling for a lot of new investors, I think myself included. When I take a look at my portfolio, I'm currently down -2%. So we're going to just quickly talk about some basics. So first off, though, my name is Steve Coleman. I am a dividend stock investor, which I put $150 into my tax-free savings account every week, trying to grow some passive income by purchasing dividend stocks that will then pay me monthly, quarterly, and just as a way to kind of guarantee that I'm growing my money, especially in a time like this. So these dividends just soften the blow. They give me just a little bit of extra money to kind of put into buying some new positions. But something that I started last week, because the signs were everywhere that the market was going to be kind of going for a bit of a tumble, a free fall, and I don't think it's yet done with us. I decided to hold off buying any stocks last week. So I still have $150 cash in the account. It's grown a little bit since then with some dividend payments. When I get put in the money this week, then all of a sudden have over $300 to put towards some stocks. I think then is when I will pull the trigger. So I'm still putting $150 every week into my account, but I think what I'm going to do is every 2 weeks is when I'm actually going to purchase some stocks. So that way I can watch and see what's actually falling and then base my decision on that. It's still averaging down, so this is still averaging down strategy. I'm just changing the frequency from every week to every 2 weeks. This is what I'm hoping makes sense in the long run. I have to tell myself, and let's go look at the individual stocks so you can kind of see how much is kind of in the red. Let's sort this by unrealized gain. So this is my spreadsheet that I've made that I keep track of all my stocks. I kind of input their activities of what the different things that were happening. It then puts it into the spreadsheet, kind of shows me all the relative information that helped me make some kind of decision. So, and that's where I have all these metrics, but then I also have to have some rules that help me make these decisions. So this is where I kind of fall back onto some basics. Well, first, even I have to remind myself that I am a dividend stock investor. So that putting $150 into my account and not putting it towards any stock purchases won't get me any dividends, right? You have to buy the stocks to then earn the dividends. That 150, or this week will be $300, does nothing for you just sitting there. That's kind of reminder number one. It's great to have a cash position, but if you're trying to grow dividends, you have to buy some stocks at whatever price they're at. Then I need to kind of be figuring out, okay, well, which ones? So, I've got a list here of, gosh, I should just count 7, and I think I've got a total of 12 positions in here, 14. Which ones do I put the money in first, right? So here I can see course entertainment. Right now I'm down to like 26%. It's making up a smaller percentage of my overall portfolio. And its ex-dividend date is coming up in June. I expect then a dividend payment from course entertainment in July. So again, I'm trying to figure out, okay, one, you've got to buy some stocks to get some dividends. How soon can I get those dividends? And therefore kind of keep that snowball effect going where just, okay, the dividends come in, I can purchase more stocks and just keep that cycle going. So as well as averaging down my cost. Do I focus in on these guys to kind of really make some significant decreases of my average buying price but then I also don't want to ignore some of the major drops that have happened. So, for example, Royal Bank of Canada, right now it's at $127, but at one point I think it was almost up to, well, let's just see. At one point in the last year, it was almost all just shy of $150. So is this a good one to actually put more money into because of the potential? And as well, always, always, always do your own research and figure these things out. There's so much data out there, and it is such an uncertain time that you really, really want to feel comfortable with whatever decision you are making. So do your due diligence and then just stick to the plan, which is what I'm trying to do. But I'm just kind of talking through kind of what are these decisions that I am trying to make. So again, I'm trying to basically average down my price, but then let's fast forward, let's say 2 months, if things stay the way they are, even if I put $300 this week and $300 in 2 weeks against Course Entertainment, I'm not going to make a major dent into this position where I'm going to get this in the green. That's just not going to happen. So my fear, my rationale needs to be, okay, well, you can't just keep putting money into the same stock over and over again just because it is the lowest one that you have. You are kind of neglecting some of the other stocks. So the other metric that I use is looking at the percentage of holdings that I have. So here I can see that, so the Vanguard S&P 500, I'm not putting really money into that one anymore. Diversify Royalty Corp is kind of my pocket change fund where anytime I have any money left over from any other purchases, I put it towards Diversify Royalty Corp. It's quite cheap, affordable stock to purchase. Right now, that company, I just feel with the economy about to stall, this one, I don't think there's going to be that much growth after that, in the next little while. So I think this stock is going to kind of just stay at this level for quite a bit, just because this one does well when things are recovering or things are the markets and the buying consumer consensus and all that kind of stuff is a little bit normal, which things are not that way right now with inflation and high gas prices and all that kind of stuff going on. Which then leads me to Algonquin, which then this is probably one where I definitely want to put some more money into because it is a lower percentage of my holdings. I do have some unrealized gains against it. So it kind of just makes sense to put some money towards them, as well as, their ex-dividend date was previously on March 30th. So I'm going to guess that it's going to be roughly around June 30th. And then, then we go from there, so Bank of Nova Scotia, but right now it's still kind of in the green. So I am going to try and do an averaging down cost strategy where I probably won't buy into Bank of Nova Scotia until it kind of gets a little bit lower. As well as I'm looking at, so not just the percentage of holdings, but I'm also kind of looking at, so what is the dividend yield? So if I had to kind of choose between those factors, so again, wanting to grow the money faster, especially in these uncertain times, where's the best place to put my money? So if I even just sort by that, like we can see, Diversified Royalty Corp has a very, very high dividend. But again, that's my spare change. That's just kind of the backup strategy that I have. And Pizza, it's still up there. It's still 12%. But that brings down to Chorus again. Chorus Entertainment, 6%. I'm also leaning towards putting money towards Chorus. So, if I jump over here and if I just make myself disappear, there we go. I put here, if I buy 75 stocks, if I buy 75 positions of Chorus for basically almost $300, here I can see that it will bring me $1.50 a month in via dividends. I'm really thinking and leaning towards that path, that idea of going that way. Again, try and look at the dividend yield, trying to make as much money in this uncertain time, these dividends, as possible. But this is a great time to ask you in the comments, what is driving your decision factors right now? Is it averaging down? Is it going after the ones that have dropped the most? Is it the ones that aren't dropping? Are you trying to kind of make sure you maintain the stocks that are growing to kind of counterbalance everything that's dropping? I would love, love, love to hear your thoughts. Drop it in the comments, and yeah, let's continue a conversation there. Bottom line, I'm going to watch and see how things play out in the market, and see which ones I should actually put money towards. Because right now, as of Tuesday morning before the markets open, I don't know. $150 is going to go in on Wednesdays. Every Wednesday, the money shows up in my Wealth Simple Trade trading account. So I won't be doing anything till tomorrow either, but I might even hold off and wait till I see how Wednesday kind of plays out again. But this week I will be putting some money towards something, but just what it is, I really don't know. And if people are looking at my stats here and see something that makes sense, if you see something here that makes sense that I'm overlooking, please drop me a comment and let me know, because when I post this video, I'm just going to post this a little bit raw and uncut. You'll hopefully you'll be able to see it and give me some good advice. And again, I'm going to take your advice and apply some. I'm going to look things up myself as well. So don't ever just take random person's advice off the internet. So okay, guys. Again, this is a quick little video. I'm using my webcam because my camera turned on the camera and battery died on me. So I did do this a little bit old school. So I hope this is cool. We'll see you in the next video. Keep it in the green. Although, yeah, it's kind of hard to do that right now since I've got red across the board. But I hope you guys are doing well. We'll get through this. We'll get through this. This is new for a lot of us, but this is not unfamiliar. Just stick to your plan. Stick to your plan. Plain and simple. Take care, guys. See you next video.